Hey traders, this is Christian from Hertz Tribeca Trade Group, and it is Friday, June 21st, and this is your weekly recap of performance and, of course, today's trading activities and thoughts for next week. Going into, do we have a lot of events next week? Well, clearly not as many as events next week. We do have at the end of the week, we've got the G20 Summit. But what's nice is we don't really have to worry about that until the end of the week. Now I'm sure we'll get the tweets, probably some unexpected tweets, I would say. How about that? You could probably expect some unexpected tweets. I mean, that's pretty much how it's been going, and they've been some trading opportunities and just reminders that you want to have some dry powder. You want to basically be taking targets. You never know when another tweet is going to happen, and it kind of shocks the market around a little bit. So just, complete advocate again for taking targets in this market. So everything, of course, that we go over in the videos is for information purposes only, not giving out any advice or recommendations. But let's start with the let's start with the technicals in the S&P. So we did hit another 52-week high today. We kind of backed off of that today. Keep in mind today's quadruple witching, so it's a pretty weird day. The volume in every single name had outsized volumes today. In my opinion, do not make any determination because you saw big volume today. It's every name, right? If you're not familiar with that, every name gets rebalanced in the S&P indices as well as NASDAQ indices. So what does that mean if you're not familiar? So take, for example, I'll give you just a quick overview of this, but you could look at any one of these, especially the equally weighted ETFs. So for example, XRT, right, which is the equally weighted retail ETF. So first of all, what does that mean, equally weighted? So that means every name in the ETF should have the exact same weight. Well, does it right now? Let's do this MHD. There we go, Bloomberg. So if you put your eyes all the way to the right of the screen, you can see CarMax is 1.7%, Lithium Motors, Carvana, AutoNation. Interesting that these are all the top weights. So why are these the top weights? Because this index, this ETF, has not rebalanced since the last quarter, which was what? March, right? So what happens is every 3 months they go ahead and they rebalance this to go back to the benchmark weights, because the variable that changes from the last time that they did their quarterly rebalance in March is price. So price will actually, so these shares remain fixed, right, in this position column all quarter long. And you can see the market value is very close, but the variable that changes is price fluctuates. Some names outperform others, other names underperform others, and that's why if you look at the bottom of the list, you've got names like Weiss Markets, Overstock, Tailored Brands. These have been the underperformers of the GameStop. So all the stinker names are on the bottom because they've underperformed. You can see some of these are only about a half a percent. So what happens is not only will the index provider reweight these, but they'll also decide who gets kicked out and what names should be added. So usually there's a couple adds and deletions, and this is just one sector, right? This is for retail. But basically what they'll have to do is sell the winners and buy the losers so that it gets back to equal weight. So when we look at this on Monday, which I'm happy to bring this up, you'll see some of these names you won't find. It'll be more. All these names will have a closer weight to, like, let's say 1.3 rather than, and it'll be pretty spot on. So we'll look at that on Monday. But so going back to looking at today's volume. So being that all these names, so that's retail. There's one obviously for tech. There's one for software. There's one for biotech, XBI. There's one for housing, ITB. So all of these names have to get rebalanced, right? And that all happened today. So the bottom line is, if you're a single stock trader or you're a technical trader and you look at volume, you kind of want to ignore that a bit. EA was one name that I was watching a little bit towards the end of the day. And you could see a little bit of a pickup in volume. It wasn't crazy, but why would EA act this way at the end of the day? Big spiky type candles, and look at the volume, right? 926,000 share block. Also, of course, the volume in the beginning of the day for futures expiration, but but that's basically why. So let's shift from that. I did want to cover that for a couple minutes. Good to know what's going on there. You see, S&P is actually selling off here a little bit more after hours, but yeah. So today was one of those days where even though it was quadruple witching, pretty much the indices were in a tight range. So I think bottom line, really nothing giving me a sell signal here. Prices above the short-term moving averages. Maybe we're a little bit extended after breaking out of this. Remember where we were just in the beginning of the week, right? We had this big, tight congestion zone. One of the things, one of the lessons that I wanted to just reiterate from how we got into the beginning of the week was that this tight value area, right? So when you see something like this is the equivalent of being like coiled, which I know some people really look at moving averages and they see a bunch of moving averages all tight and wound together. This value area, just really means that normally there's going to be a big move coming. Look in the last, and again, this is on the 1 hour bar, but you could see all these value areas pretty normal. We had a big one here. But look at how tight this was. So, it was kind of telling us that we were going to have a big move one way or another. So we resolved ourselves to the upside. Does this mean that you want to go out and party? Well, maybe a little bit if you had a great week. Absolutely, to do that a little bit. But, still, I still think this market is going to be a battle. Qs, what do they do today? Not much. Again, basically traded in a tight range. Qs did not hit a 52-week high, but pretty darn near close. So that'll be something to watch. Maybe some of these things can come in and kind of check back a little bit. I think that would be a good buying opportunity. And then the one that just doesn't seem to fit right now in this market is IWM. It is back above the 200-day moving average, but some decent, pretty decent chop for this week, or underperformed down 80 basis points. So for the week, how did these things shape up? And this is the newsletter that I provide every weekend. We do a quick newsletter, which is a little bit briefer. I actually shortened this the last couple weeks, and I do a video where we talk about single name setups that we put out every week. So the top line performance, you can see S&P was up 1.6% this week. IWM was up 1.4%. The Qs really outperformed, up 3.3%. Bonds were actually flat for the week, which surprises me. But I want to get into that chart in a second too. But it is what it is. They were flat for the week. And gold was the star performer, up 4.3%. So we're going to go over these two charts. I want to talk a little bit about the dollar as well. Before I do that, we'll just look at the performers. I think it always makes sense after the week to take a look at what names really outperformed. That was the previous week. This is this week. There we go. A lot of not only energy, but a lot of commodities really shine this week. And then some riskier sectors too. OIH, which has been a group that's been energy has been really beaten down hard. So with oil moving up this week, they got a big old relief bounce. OIH was up almost 10% for the week. XOP was up 7%. So really, some of these, I think some of these are probably, you could call them under-owned. They were the outperformers for the week. Then there's a couple other sectors mixed in. Gold miners had a huge week. I'll go over that chart as well. Biotech got off to a great start this week, and that looks, a lot of names really got going and had some good performance today as well. I think a lot of people were looking at GBT. Alexion was another name that had a couple really good days of performance. So it's nice to see that group get going, because that's had a tough year, I would say. And so maybe we'll go over that chart as well. Chinese internets, of course, with the trade talks, Trump did say that they're going to have some sort of meeting and maybe reopen those trade talks. Whether or not that they actually get anywhere is a whole nother story. So it's a kind of, you just buy the rumor. So again, very important concept, right? Am I going to be wanting to put a lot of risk into that G20 meeting? No, but I think these things are great for buy the rumor and then sell the news, and then you just kind of move on. Maybe you have some type of a trade on for if something does get done, but I'm not putting much faith in them getting anything done. It is what it is. It's my opinion. Semis did okay this week, even though they struggled a little bit. I think today the semiconductor ETF was up 4%. Robotic stocks, software had a couple really big days this week, up 4%, and then kind of gave it back. Steel had a big week as well. So again, some leaders that have been leading this whole year, like software, had another big week, and a couple other groups mixed in there. But there was a lot of groups and sectors that bounced pretty decently from being oversold, like the energy groups. What didn't perform this week? I mean, there were sectors that went down. The very I would say interest rate sensitive home builders, they were down 2.7% this week. The banks also finished down for the week. Always tough when you have a dovish Fed. They like a upward sloping yield curve where they can make money on lending out. So that the yield curve is going to be tough for the banks, right? So they finished down for the week, even though they outperformed today. They had good performance, I think, today. REITs and some of the other utilities were basically flat. So it was kind of a little bit more of a risk on rally this week. And then in international areas, a lot more names I think that were up than down. Saudi Arabia, which has been a really strong ETF this year, the KSA, underperformed. European financials were down. Again, same thing there with the ECB meeting. That's not going to help the banks too much with the yield curve over there as well. What performed pretty well? China, picked up. Again, a group that's been kind of been underperforming. So ASHR was up 6% this week. FXI, Taiwan was also up. EWT, South Korea. So a lot of Asia securities. You can see emerging markets were up 4%. So let's start going into some of these charts. But again, I think it's always nice to see what performed. Kind of makes you think: was I in any of these outperformers, or what, or did I miss them? So EEM gets back above value. EEM is always going to look gappy on the charts because the majority of the price action happens. There's a lot of Asia securities, and their markets are open while we're closed. So what happens when we open, the price moves up to where the NAV is, which is basically originating from what China did overnight. So EM will always look gappy. And most international ETFs, especially Asian ETFs, are going to always look gappy in the charts. But interesting, EM held value. This is the weekly chart value area. Really nice move here, but we kind of stalled, about a third through this trend. But we did find support right where we needed to at 39.63. So that was the first chart to go over. Let's talk a little bit about, we could look at IFA as well. This is international developed. Kind of start with international markets first. That's also in value. You can use 64.34 if you really want to go long international developed markets, which is basically Europe and Japan. That's in here. Let's go over to. So what charts did I mention that we want to go over? Let's go to bonds first. Outside of some of the areas that I wanted to talk about. So interesting. Look at the weekly how this ended up for bonds. Right, bonds have been one of the biggest outperformers. Notice that we have a toppy looking candle. Now again, remember with these candlestick patterns, one candlestick is not a pattern, right? It's just one. So what I would be looking for is to see if this comes in further. Notice there was a virgin point of control taken out a couple weeks. So my opinion, right, as we get over to the weekly chart, because this did sell off decently. Remember, we hit this virgin point of control as well. So there's a lot of upside targets that have been taken out in TLT on my technical charts using the MarketWeb's indicator that, by the way, you can purchase on our website, right? So if you want this same type of package on your screens for Thinkorswim, you could go there and you could purchase this. This helps me a ton with looking at things like TLT, because look at how well TLT has behaved here, right? We moved up to this version point of control here, and we reverted. We took this one out, we reverted big time, and then we took off like a rocket. Are there other ones above here? Yes, there's another one up here at 139, but if you look at the last couple ones that we've taken out, there was reversions. So if you're bullish on bonds, or if you feel like you want to get into bonds, maybe give this a little bit of time to kind of back and fill a little bit. I actually do have a small trade on where I'm short TLT, which made a little bit of money today. But I'm looking for this to come down a little bit more, maybe into the 20-day moving average and kind of check back a little bit further. Again, remember what this did before, went from like 126 to 122. So we get something like from 132 down to like 128. That would be great. And that's probably where I would like to take that whole trade off for TLT. So again, important to look at bonds, because what fuels, when bonds make a big move, it's going to have ripple effects in the utilities, the REITs, the consumer staples, the home builders too, right? They actually do well. There's a positive correlation between those two things, right? So ITB getting hit a little bit, maybe because rates backed up, and maybe they're kind of telling you something here too. But they did not break out. A lot of chop and no full breakout there. So we'll have to watch and see how that develops with ITB. So another chart, home builders, they got a little bit above value, but really just didn't have the momentum to carry through, and backed off. So yes, looking at some of those charts, XLU didn't really show any major signs of weakness, even though it just had like a choppy day. I do think one group that I think could come in a little bit, which we saw some put buying, is consumer staples. I do think that this group, just like any other group, can pull back a little bit. I don't see any sell signal here, other than we saw put buying a few different times, I'd say, in the last 6 or 7 days. Not any today, but so anyway, that's consumer staples. Just moving on, do we want to talk about gold? Might as well talk about gold. The chart that everybody's been talking about. If you've been a regular listener to my videos, you know that I've been talking about gold for a while. I've just been very hesitant to get in, especially in a week where we've got central bank meetings. I know gold is very whippy, so I didn't really want to take a big position with central bank meetings, because they could all of a sudden just very quickly do an about face and go the other way. But yeah, so the unfortunate thing here is, so here's the good and the bad, right, for gold. The good is that we're now breaking out of we're trying to break out of a base. And if you go to the weekly chart, here's really where it comes apparent, is that we've broken this 1343 level, which I've been talking about now for weeks. So the good part is this is a long base, right? This is going back to 2013. So this has potential to really, you can measure this and extrapolate up to here for gold or GLD. And you can kind of make some observations of where this could get to. Now, is it overbought in the short term? Absolutely. So what did I do today? I wouldn't call it a chase, but you have to start someplace, right? If you think that this is a longer term trend, so for example, GDX, if you look at the weekly chart, there's a VPOC all the way up here at 46. Now again, this is really far away, so the gravitational pull is greater for these virgin point of controls when you get closer. If you're far away, it's less of a gravitational pull. However, there's not a lot of things that are in between here. Maybe a little bit of resistance up here, maybe a little bit here. And if you go to the daily chart, so that was 47, right? There was a virgin point of control. Also, you've got one which is still a decent move, 30 and 32 and a half. And you got another one there up at 42. So if this group, gets going and has more momentum, there's a lot of things that this could retrace now that it's getting out of range. So going back to how that I would tackle this now, if you look at the RSI, relative strength index, it's an 84, right? So it is overbought at this point. So any check back, I think, is really more a better place to add a position, but you got to start someplace. So I started a position. I fully intend or understand that that position is probably going to be a loser in the short. Like I went out to November calls, but I'm looking at the longer term trend here, right? So so going up to like $30, which I showed on the daily chart, 32. That's what I would be positioning for, and that's a decent percentage move to try to get. Um, so you have to start someplace, and I would be looking to put a bigger position on if we kind of check back to like 24, which I think the way that gold moves, I could definitely see that happening. All right, so that's gold. So that's trending, something different. I think it's personally, it's always good, to see new trends and to be able to get involved in them, and then just treat them, insert them into your trading plan, and say, hey, these are some areas that have momentum to them. And of course, if something is going to trend, even though if it's not something I usually trade, I want to be a part of it. Just to talk a little bit about more about this week, well, we could talk a little bit about today's option activity too. Target, we pointed this out earlier. It does seem like you're getting participation in a lot of different areas at this point. These retail stores have been doing pretty good. Walmart, Target. Notice, I think this was a pretty. Now, I don't know, of course, why they bought calls today, but it's a pretty nice technical setup. You got to move, a nice move up, and then a move down into the 5-day moving average, and probably a good place to get involved. So that was a nice momentum play for the day. SE was another one that has just been a monster. This thing has just continued to go up and up and up. So it's really interesting with how you're trading this market, right? I mean, this SE has gone up since it got out of this trend, right? And you could foot this to like the GDX, but once this popped out of this range and got from 18, look at what the stock is doing. So depending on what you're doing, right, with your trades, if you're trading short term, mid term, long term, there's definitely a place, I think, in one's portfolio to be hanging on to some of these trends longer term. It's really tough to be patient if you are trading a lot short term to hold on to something like this for the long term. What helps a little bit is to kind of stick these in different accounts. Sometimes in my trading account, when I see positions and I'm looking at the short term and the long term, I have a propensity to say, oh, geez, why do I have this position on? It's taking up space, whatever. So, there are different things to kind of trick yourself. Of course, you still want to monitor trades, but, this thing has acted very, very well. The only time that it's really breached the 20 period moving average was a couple times, and a couple times intraday. So, this thing has acted very, very well. And saw the option activity for this came right in after the first 10 minutes of the day. So SE, where they started buying the big block of 4,000, which you could see I have on Twitter, but this was right here basically. So you had to chase. So again, they don't make it easy, right? I mean, you had to chase a name that was up about over 2% on the day. And then it just continued to go up. And of course, I think it was on CNBC, they mentioned it as unusual option activity or something like that. But they came in a couple times. You could see 1045, a little bit at the end of the day too. So, interesting stuff. What else? So, I want to talk a little bit about strategy for the week. I mentioned I was going to bring up some other charts as well. What else was I going to go over for the day? But really, like strategy, I try to post. I definitely post it for members. I do it maybe once or twice a week, where I talk about percentage change from the open. I think depending on how you've been trading this market, you're either doing very well or you're doing so-so. And what I mean by that is some of the now this was a great runner, right? But this is kind of the outlier, right? There was a couple of these that ran, but for the most part, for example, the software names, which I was touting yesterday as being really showing the market leadership. I think they underperformed today, and I think that's normal on quadruple witching. But we looked at a bunch of different names that were, like take like Okta for example, right? But the majority of what happens is right on the open, right? And then look at what happened like yesterday. And that's kind of I think it's very symbolic of how this market has been really for over years. It's been better to hold put positions on at the end of the day and take them off in the beginning of the day and then kind of regroup. But I think it's been even more prevalent the last couple weeks, and that's why I keep showing that spreadsheet of percentage change from open, because I hope it like sinks in. And again, I'm never trying to like rub it in to anybody, but I hope it kind of tells people, just illustrates that the majority of the moves, and not always good moves, but the majority of the moves when we're rallying, they happen overnight. Like, so for example, Thursday we came in and we were up, the S&P was up 1%. Now it did rally back, but a lot of names didn't. And this is just one name, but a lot of names did this. Like Twilio has been an interesting case the last couple weeks. Every time, like almost every day, Twilio, the high print is around the open. And it's had a couple outliers there. So, adjusting your trading style a little bit. I know some traders, they like to come in and like, okay, look for setups in the beginning of the day. What am I going to trade? But if you're constantly seeing that the high print is, within the first hour, either you have to be an expert scalper or you have to think about how you're putting your trades on. So for me, scaling in helps. And then, of course, looking, at the end of the day for some trades that are setting up pretty well, right? So that's some strategy. I think I'll probably leave it here at this point. Just a couple announcements. If you're a member of Tribeca Trade Group, we're having a trader meetup at the end of it's actually August 1st. We're having a trader meetup. So we're going to be doing that on Thursday. We're going to be going out for drinks and then going out for dinner afterwards. We work really hard. I think most traders in the room are very dedicated that we have. We have some guys, speaking of scalping, who are just doing an awesome job scalping. So we're going to do that on Thursday, and then Friday, what we'll do is we'll have my office is in a WeWork, so I can get a conference room, and we'll kind of have if people are coming in from out of town, you can kind of come in and trade. We'll trade together like a trading desk, rather than a virtual trading desk, and we'll go from there. So yeah, so if you're not a member of Tribeca Trade Group, check us out at www.tribecatradegroup.com. We've got a lot of good things going on here, and I think we're really kind of capturing the trend. And again, really going over that strategy where you're not getting caught like in the beginning of the day, which I see a lot of people. I see some very good traders who've got, like, picked up on this, and I think some traders are still kind of doing the same thing and not really adjusting to that mechanism of capitalizing on the overnight moves. All right, guys. So that's it. Have a great weekend, everybody, and I'll see you guys in the trading room on Monday. Members, you could expect, as usual, the video with a bunch of setups, and I think pretty good, to look at some setups that maybe in some different sectors. Oh, that was the one chart. I knew there was another chart that I wanted to go over. The dollar. Let's just take a quick look at the dollar, what that did for the week. This should provide some relief to some more multinational companies. So I think the dollar going down, breaking the 50-day moving average should be good for some areas that have possibly underperformed a little bit. All right, so we'll talk more about that in the weekend video. Have a great night, and see you guys on Monday.